evening, everyone. This is Henry Gamble with SimplerOptions.com. In today's free video, I would like to talk about Apple. So this works out great because on Sunday night, John spoke about Apple in the free video and gave you a strategy that you could use around that. And I always love situations where, especially if you follow the videos religiously, you're going to see the idea before the earnings announcement. Today we put that exact trade on in the room, and now we get a chance to manage it. So if we come over and look at Apple during the after hours, because earnings are already out, we can see that we have a high during the extended session there around 136. The low after that move was 129.91, and I'm going to be looking for Apple to move higher into tomorrow. Now the way that we set up this trade, this was slightly different the way I configured it versus what John spoke about, but still a very similar concept, primarily because I had a little bit more of a bullish take on Apple. We look at the daily chart and we saw that a squeeze had fired, and another thing that I liked about the daily, we'll revisit, but the fact that it wasn't extended means that it has potential for more upside movement. So what I did with this was started, and you can piece the trade together as you like, but essentially I was selling the 133 straddle and then buying a strangle as protection inside that. I did it as a ratio, selling more puts than I did calls, ideally giving myself no upside risk, great rewards if there is that muted response like what you look for with this strategy, and then of course if Apple just falls apart, I know what my risk is and I define that when I place the trade. If we look at it here in the risk profile graph, this is another really excellent place to get a feel for what we want to see with these types of strategies. We'll make sure that we remove all simulations to just show what we have. And that's where I was talking about your defined risk to the downside. You always have to address that. But what you're looking at is the peak of that profit is going to be right there around 133. If it just keeps moving higher, well then my risk is still defined. But what I would like to see tomorrow is that if we can open up anywhere near those prices, taking off the short calls, holding the short puts, and then looking at adding another position in the next monthly series out. So what I talked about where you ask, okay, it's had the move, is this the end of it, or does Apple have more room to move higher? Just running the major swing high to swing low in that move, we know that we've cleared all the major resistance. Our target up here is at 136.86, and then we have a snow line up here at 139.32. So I don't know if it's going to happen by the end of the week, but it wouldn't surprise me to see that we open up tomorrow. If we can form a range and break out from that, look for your 1272 extension. From there, the snow line typically acts as a magnet, and I think those are the two primary targets that I'll be focused on. So hopefully that helps in relation to an idea into application, the idea of modifying the ratio of those and how it gives us no upside risk. If you like strategies like that and you're going to be looking for more of them and other places to put them on, Bruce's class that's going to be on this Wednesday I think is an excellent resource for that. So what we showed on Sunday, talking about it, follow through with the Monday. This is going to be a step-by-step analysis of the exact same thing. So if you like that, if you're looking to enhance these strategies and really get an edge in them, Bruce is excellent at teaching them, and I think you guys will find it very valuable. So I hope that helps, and we will see you at the next free video.